Hey guys, it's Sean at eMiniSchool. It's June 14th, Monday. Let's go back and look at the last couple days. So looking at the TF chart, we had blue bars here indicating a big move was going to start. Price was about 627, and it basically, we also had another signal here with blue bars, big move starting. Today we gapped up, basically came up. We started having blue bars, indicator was high, meaning we want to look to exit the trade. Okay, so we're going to follow the blue bar, and we would have been stopped right here as this bar came down lower, taking out that low. Okay, so last couple days our outlook has been up. Looking at the 60-minute chart, we had the 605, 606 area as our lower target. And also on this 60-minute chart, you'll see that we had blue bars at the target confirming that level, that was a substantial low. Okay, so basically in this corrective pattern, we calculated it down to the 605, 606 area. Okay, so we knew this level, the 604 or 605, 606, right here on the 60-minute sell signal. Okay, so swing traders would have shorted here with the target here. Now this low came in pretty close to that low, so if you're swing trading, this low was substantial on a gap down. So I'm not saying you'd want to really hold through all of this to make it down to here. We would have been stopped here anyways, but pattern completion was at that point, and we've had that zone all the way back on this day right here. So let's look at a couple more charts. We'll go ES 10-minute today. Gaps up, blue bar, same as the Russell, blue bar high, trailed to stop, stopped high bar of the day. So let's say you missed this long, you're not holding over. It would have been hard to get in the morning right here. So if you're watching and you start getting blue bars up here, you at least know not to go long. Okay, so aggressive traders could short this down. You would want to break it down to a smaller time frame though for an entry. Aggressive traders that have had our course for a long time, they do short here, but that's not a true signal. That's a higher risk, more aggressive signal. So we'll back up the chart a little bit here. This was the same low that the Russell had. Okay, we make this pattern, we correct down, blue bar low, meaning this down move is over. We gapped up, made a wedge, and then we broke the wedge out to the high of today. And then we're pulling back. So the key though is having the bigger outlook, your bigger targets, and you really only want to trade the smaller time frames down to it. Yes, there are going to be some long signals because it's a 60-minute chart. So there will be a few days in there where there are some long signals on the 3-minute and the 10-minute. The trick is knowing those are counter trend to the bigger pattern. So you're going to want to trade less contracts and not really hold those trades too long. Okay, you're going to want to take those trades off at the first target. So let's look at the 60-minute ES. Notice how this low did not break this low. Okay, look at the Russell again. This low broke this low. Okay, let's look at the NQ. This low did not break as well. So that's why we always want to look at all three markets, because one of the three is going to complete before the others do. And it's a good heads up to stop going short when the 60-minute completes on one of them, either the NQ, ES, or Russell. So we always want to look at all three markets. So from that 605 low, we bounced all the way back up to 660. Okay, so that was a substantial low. The blue bars caught it on the Russell. So just wanted to show the last couple days on the charts. And if anyone has any questions, you can email us at trade@eMiniSchool.com.